Today, we're going to talk about crypto record keeping. It might sound boring and no one wants to think about it or talk about it, but in this video, I'm going to talk about why it is important and how it can save you a boatload of money. Every week, I talk to a dozen or so people about their tax situations as part of our crypto tax savings consultations. You can book one yourself at the link below. In those consultations, I talk to people about their situations and how we might be able to save on their crypto taxes. In the last week, a theme has emerged, which is that there is very often insufficient or inaccurate records from exchanges and through crypto tax softwares. In this video, I'm going to talk about the importance of keeping your records, not only to avoid headaches in the future, and trust me, they can be significant, but also to avoid the IRS from taxing you more than you should actually pay. Every day, I get calls from two groups of people. One group is people that want to save on their taxes. The other group is people that are getting audited by the IRS. And in those audits, it's very frequent that their records are a mess and that they have not properly accounted for their crypto over time. So why is record keeping so important? I'm going to talk about two calls I just had last week that highlighted the importance of record keeping and either will help them avoid trouble or has brought them into problems. The first example is someone that had been trading for many years, but has not reported crypto on their taxes. And over the years, they used a variety of different exchanges, including different protocols and L2s. And so as a result, they had a ton of data. And they used one of those off-the-shelf softwares that are out there that help people prepare their crypto taxes. And when they put all this data in, they were getting incredibly unreliable and inaccurate results. In fact, it was showing that they were owing millions of dollars greater than they suspected that they were actually owing. And so why was this happening? Well, one of the main sources was because they didn't have full data. Over the years, they used so many different exchanges that they not only forgot some of the exchanges that they were using, but some of them were just no longer available. They weren't able to get the data from those exchanges. Now, this may just seem like it's a problem for everyone. It's a problem for the IRS, a problem for the taxpayer, but ultimately it's the problem for the taxpayer. And that's because this data supports your cost basis or what you purchased the crypto tokens for. And so when using crypto software or working with a professional, you need to be able to show the purchase price in order to deduct that from your sales price to calculate your gain or loss. If you don't have cost basis, then you're going to be taxed on your overall sales proceeds or sales amount. So if you sold a Bitcoin for $60,000, but you had purchased it for $40,000 would be your cost basis. But you need the data, the records to support that it was $40,000. And in many cases, over time, those records could be lost. Exchanges come and go. And so make sure that you're saving your records periodically, not only just API keys, but also the CSV files, actual tangible files onto your computer. So this call, although they had a significant problem, they have years of unreported crypto and missing data, it is a solvable issue. By working with a professional such as us, we can help identify the missing data, and in some cases retrieve it, in other cases make reasonable assumptions based on blockchain analysis, and be able to support cost basis in many of those situations. And that way have full, complete, accurate reports that can be filed with the IRS and hopefully avoid issues, avoid being one of the people that call us as being part of an audit, and instead we can focus on tax savings instead. So that was the first call that I had this week. The second example that I want to talk about is from a taxpayer who received a IRS CP 2000 notice. And if you've been watching my other videos, you'll know that a CP 2000 notice is a nasty letter from the IRS that usually includes crypto calculations that are as unfavorable to the taxpayer as you can imagine, not including cost basis and taxing you on your overall proceeds based on information that the IRS received, which wasn't reported on your taxes. And so this individual received one of these notices because BlockFi reported information to the IRS, but the taxpayer didn't report that information on their tax return. And so as a result, the IRS took all of their sales on BlockFi, which added up to be hundreds of thousands of dollars, and taxed them on that full amount. But what became very difficult in this situation is the taxpayer is unable to retrieve their records from BlockFi. They can't identify their cost basis. And what that makes this even more shocking and surprising is the IRS is trying to tax them on the sale of stable coins. And if you're familiar with stable coins, you know they're generally purchased at $1 and sold for $1. But even in this example, which is incredibly extreme, the IRS is requiring that we support the cost basis of these stable coins, that they were actually purchased at $1. And while you would think that that would be so easy, BlockFi, one of the largest exchanges a few years ago, of course it now collapsed, went through bankruptcy. But years ago, it was massive, right? So many different users, millions or billions of dollars in assets being held. And so many people relied or expected that their records would always be available. Just as you might think that you could always get your bank statements from a bank, people thought that BlockFi, you could always get those records. And so this taxpayer is now confronted with the situation where they have this IRS notice, essentially a mini audit, trying to tax them improperly on the sale of stable coins, but they don't have the records to show what they originally purchased it for. A very avoidable situation, not only if they had reported originally, but if they had saved the records. And so a lesson from this is that you shouldn't rely on any exchange, big or small, to maintain your records. Even in bankruptcy, it seems to be not a priority of the court to be able to maintain and make it available for users to access the records. So it's on you to be able to save those records and to support your cost basis over time. Now, in this second example, not all hope is lost. In fact, we are very optimistic that with our representation, we'll be able to support the cost basis. We'll be able to piece the records that we do have. Although we can't go directly to BlockFi or other closed exchanges and get the records, we can still often identify inputs and outputs. And in the case of purchases of stablecoins, there's usually a cash transfer. And so we're able to trace it. There's still evidence, there's still things we can do. It's more difficult, but we're very optimistic that we'll be able to provide a strong argument to the IRS on why much or essentially all of this shouldn't be taxed. But at the end of the day, it's on you to save your records. In this second example, this taxpayer is in a world of pain. Not only have they received this IRS notice, but they also need to hire a tax professional and even a crypto accountant to rebuild and reconstruct their records. And this could be avoided. So learn from the pain of my second example and avoid it. And it is very avoidable. It could be avoided in at least two ways. Number one is by saving your records. And number two, by filing your taxes and reporting your crypto before the IRS comes to you. In this example, however, they're going to have considerably more expense than they would have if they had originally reported. Because if they had the records years ago, filed it based on those records, they wouldn't now have to hire crypto accountants, forensic accountants to try to rebuild those records. The records would have been there. It would have been easier to report. Now, years later, with the IRS breathing down their neck, they have to go through this additional expense, additional headache. So learn from their pain and avoid it. If you haven't reported your crypto, now's the time. I keep talking about records and the need to save your records. Make sure you download it as a CSV. But what records am I actually talking about? The short answer is as much as you can download from each exchange or wallet. Unfortunately, up until present, there is no uniform reporting by exchanges, brokers, or unhosted wallets. Now, a lot of this is going to change in some upcoming regulations that have now been finalized. And we've got information on our website about these final broker regulations and how it's going to change things. But at least to date, different exchanges, different wallets, they all report things differently. They all have different types of files. Some of them report to the IRS, some don't. Some allow you to download in different forms, but download as much as you can. And the key items that we're looking for are withdrawals and deposits, trades or exchanges, and purchases of crypto with fiat. Now, of course, there are many other different types of transactions, but at the core level, you want to make sure you have all the different types of transactions, all transfers, all trades, all data, all ins and outs, not just purchases, not just spends, but all of the above. If you want to learn more about what cost basis is and how it's calculated, as well as what records you need to download from these different exchanges, we have a great resource on our website. We're going to link it in the description below. Check it out. It answers most of the questions that we hear every day. In conclusion, make sure you keep your crypto records. Learn from these stories. Don't get hit by an IRS notice. If you haven't reported your crypto or reported fully or accurately, now is the time. Don't wait. Don't let the IRS come to you. Reach out to a tax professional such as us. There are ways to fix this. If you found this video useful, or you know someone else who perhaps has not reported their crypto, please share it with them. And if you want to learn more about how you could save money on your crypto taxes, it's not all about how to just report and make the IRS happy. It's also about keeping more money in your pocket. Schedule a crypto consultation with us to talk about tax saving strategies. Share this video, give it a thumbs up. It really does help. It helps other people see this that might be able to benefit as well. And until next time, thanks for watching.